Are you looking at alternative investments so that you get higher returns in the stock market, more cash flow, more tax benefits? And if so, we're going to go through and look at a variety of different alternative asset classes and look at some of the pros and cons of each. So let's do this. Hey, my name is Michael Blanc, and I help people become financially free with real estate. So maybe you're scratching your head right now, right? At the stock market, typically, and we give our money to our financial advisors, and we believe that they're going to take care of us. That's what I thought when I had IPO millions from my IPO in the late 90s, early 2000s. And what I realized is that the financial advisor makes money regardless of whether the market goes up or down. It doesn't feel right to me. I mean, typically, the higher the return, then the higher they should get paid, but that's not how it works. And the other thing I did about the stock market is now, if you do have a long-term outlook, 20 years outlook, obviously the stock market is always going up. But then there are these dips, right, where there's a market correction or market crash, and this is problematic for at least a couple of reasons. One, what if I need to withdraw money during that time? I need to send a kid to college, or I'm retiring or something, I need some kind of cash. You don't want to sell assets during this time, and you can't predict them. The other thing it does is it really actually reduces your return. So how the markets say you actually get a 10% return or whatever 9% it is over the years, but if you actually do the math, it's much lower than that because that principal during those corrections are reduced so much that the return actually is reduced also. So it's this double whammy. So this volatility is really problematic. And number two, very few stocks, unless you buy high income dividends or you do sophisticated options trading, don't really produce cash flow. So I can't make investments and then actually exit something unless I follow the 4% rule, which means that I can live off 4% of my assets. But my gosh, if you want $80,000 a year, you need $2 million in your account. Like maybe you have that, maybe you don't. Maybe $80,000 isn't even enough, and you need twice that amount. And so this whole thing about actually living off of your savings is not really realistic. Instead, you're looking for alternative investments that generate cash flow, maybe as high as even 10% or higher of your investment. Then there's the taxes, right? You're spending a lot of taxes. I was on my capital gains. I made some money, but my gosh, now 25% has to be paid in taxes. And I'm like, okay, well, I guess that's the way it is. And I now know that there are certain alternative investments that it's not the way it is. And so we're going to look at some of those as well. So there's this beautiful world of alternative investments that has really unfolded itself to me over the years. And when I first quit my job in 2005 and I had my IPO millions in there, I felt a giant urge to deploy that capital to generate financial freedom and passive income, to get financial freedom. And so I wasn't really as diligent as I should have been in deploying those things and lending out money and investing this, investing in that. But the benefit of it is that it opened up this whole new world of alternative investments. So I've done a bunch of stuff. I've done almost all of these investments that I'm going to talk about here today. And it's pretty cool, right? So obviously there's stocks and equities, ETFs, and we just talked about that as well. There's bonds. Bonds have their place in a portfolio because, well, they're much more, they're much more conservative. They have, especially if you hold them to maturity, they pay out a certain amount of interest. The only problem is if you try to sell bonds early, right? So as those yields go up, the value goes down if you're trying to get out of those early, and that's a problem. But typically, you're holding them to maturity, and it's not nearly as a problem. And then there's money market, right? So that's just, especially now, you're getting 4.5%, 5% in a money market. It's a pretty cool place to be. We talked about the problem with the stock market, and then bonds and money market are similar, right? They're low risk. Interest rate is 5%. But here's the thing about this: if your money market is getting a high interest rate, right, 5%, that's pretty cool. Especially if an alternative investment only gives you 5% cash on cash, they're very comparable. But again, there's no other return in a money market. That's it. And you're paying taxes on the interest. So you're very much capped. Yes, the risk is much lower, but you're very much capped at the returns you could make. And as the interest is lower in money market, obviously it then unlocks a lot more alternative investments. And I'm not saying you should be in money market, but right now, especially in this kind of market environment where there's a lot of fear, people tend to be more conservative. And this is exactly the kind of environment that Warren Buffett buys in. He looks for blood in the streets, and in the blood in the streets, he looks for the opportunity. He looks for those fundamentally strong companies that are temporarily undervalued. And a lot of those alternative investments go through those market cycles as well. And so the question always is, yes, there should be a certain amount in bonds and money market and in cash, essentially equivalents, but you should always be looking for opportunities. And so I'm talking to you right now now because I consider you more of a sophisticated investor. You know, the simple investor just hands their money to their financial advisor or buys a bunch of ETFs or the S&P 500 index. Okay, but you want greater yield. You are looking for cash-on-cash return, cash flow, and tax benefits. And so this is really where these other asset classes come into play. So let's talk about some of them. Well, let's talk about cryptocurrency, right? So cryptocurrency and precious metals are used in a similar vein. They are inflation hedges. They are, you know, not connected or correlated with anything else. And so precious metals is pretty cool because they say, for example, an ounce of gold in the year 1900 bought a very, very nice suit, and today at around $2,300 an ounce buys a very nice suit. So that ounce of gold has retained its value, not in absolute dollar terms, because it's obviously way more expensive now than it was in 1900, but in its value. And this is because these are real assets. Any kind of real asset maintains its value in an inflationary environment. And this is why real estate, for example, continues going up in an inflationary environment and so on and so forth. Now, people say cryptocurrency is the same way. It's non-correlated. It's out of the banking system. I can't talk too much about crypto. I've had some very smart people try to explain how the fundamentals work and that there's only a limited number of coins out there. I call BS on it because I can invent a crypto right tomorrow, and now there's more cryptocurrency out there. Maybe not Bitcoin per se or a specific brand, but there's unlimited amount of crypto out there. And if one goes up, one goes down, and one goes up, no one can explain to me fundamentals. And frankly, why is it inflation hedge? I don't know. It's beyond me. So I'm going to leave that to you, the watcher and the reader, to decide to own crypto. It's not part of my portfolio. I don't understand it. In general, if you don't understand something, you definitely shouldn't invest in, but that does not mean that you shouldn't find out more about it. So in my case, for example, if I'm like, oh, I'm opposed to crypto, I don't really know enough about it, even though I've tried, what I could do is buy a coin, right? Or a part of a coin. And now that forces me to learn the asset class, and then I can make my own conclusions. So that's a really good advice for alternative investments, is to invest a little bit, learn about it, see how it works. So we got precious metals and crypto. That's pretty neat. Now, the other thing that we have out there, for example, is oil and gas. Now, oil and gas is pretty cool. Again, definitely not correlated. It's very volatile, very market dependent, but the cash flow on it can be very high, especially depending on what you're doing. If you're getting in more of these drilling operations, the cash flow could be kind of low and it could be complete loss, right? But then if the project is successful, the cash flow in those things can be very high, and the government, despite what's going on in the government right now, they're incentivizing oil and gas exploration, and so you get huge tax benefits. You actually get better tax benefits than the depreciation with real estate, where you can write off 90 to 100% of your investment in that same year if you invest in oil and gas. So it's definitely something to look into. I've done a little bit of it, not an expert on it, but the tax advantages and the cash flow benefits can be very good as well. That leaves us with real estate, really. Real estate from a major asset class. Although we have private equities. We have private equity. I don't really know too much about private equities. Typically, you need to have a certain high net worth to get in there. You need an advisor who knows private equity. There's angel investing, venture capital investing. Those are pretty cool. I know people, that's all they do. Another great investment is, for some people, is buying businesses. It's similar to buying a piece of real estate. It's already cash flowing. Buying businesses and then helping that business grow and scale if you're in that environment. That's also another way to do it. Typically, though, that's not going to be very passive. And I've done this on a small scale. It's not as passive as you might think. That leaves real estate, which is presumably passive, but let's talk about what kind of real estate we're talking about, right? Rental property, and maybe you own one or have owned one. You're like, gosh, well, first of all, it's not very passive at all. I got to deal with a bunch of stuff, and it's really not only passive, but not that profitable. I'm only making $100, $200 a month if I'm lucky, right? But I need $10,000 a month or more. How do I scale this thing, right? And so the whole problem with real estate, flipping, for example, not very passive. Rental can't really scale, not very passive. There's turnkey real estate, which is pretty cool, where you go with an operator and you buy the house, you own the house, but they operate the house, they fix it up, they put a tenant in there, and they send you basically rental income, which is pretty cool until your operator flakes out. Or they can't fill the house for 2 or 3 or 4 months. So I've had people who've done that with some very mixed results, where sometimes they will lose, months and months of income. They have to go there personally and manage the property, and they take it back essentially, and it's not passive at all. That leaves commercial real estate, which is really my favorite. I like 3 asset classes from a passive investing standpoint. And these are all fairly recession-proof. Real estate classes is mobile home parks, self-storage, and of course multifamily. we're in the multifamily space, so I'm partial to it. From an operator perspective, in my opinion, it's the most efficient, most profitable, more stable. But from a recession-resistant standpoint, all three asset classes you should take a look at. So we'll talk about multifamily just because that's what we know about. That's what we specialize in, is multifamily commercial real estate. But the benefits are really there, that there's long-term appreciation. And so obviously real estate, like the stock market, in the long term goes up. It's definitely inflation hedge, right? As inflation goes up, rents went up, which means valuations went up. So I like that. But I also like how it behaves in recessions. And we've had several over the years. And multifamily specifically has behaved very well in basically every recession from a rental income perspective. Not so much from a valuation perspective, but if you're cash flowing, you can ride it out. We're seeing that right now. For example, with single family houses, I don't really love how that behaves in some of the recessions, particularly in 2008, where both the rental income and the valuations were just decimated and people lost their shirt with rental housing. So I don't like how that behaves. I don't really like investing in an asset class that could be catastrophic, unless it's in the speculative part of my portfolio. But with regards to real estate, I'm looking for something a little more stable. And multifamily checks those boxes as well. Then, of course, it generates cash flow. If you invest in the right real estate, it can generate anywhere between 5 and 10% cash on cash return. That means on $1 million investment, I'm getting $100,000 in cash flow. That's cool. I can do stuff with that. I can exit whatever I'm going out of my business or my W-2 job or my partnership. I actually now have an exit vehicle. And then, most magically, there's amazing tax benefits. So this thing called depreciation, which you probably already know about, with commercial real estate, it makes sense to do a cost segregation on that so that we can actually depreciate 60, 70, 89% in year one, which then carries over, and you can use that to offset any kind of passive income. And if you are a real estate professional, you can actually use it to offset your earned income. So taxes is a big topic. We're not talking about it right now, just saying there's a big benefit. We do a lot of content on the tax benefits on real estate. So educate yourself around that, because sometimes I think that I'm in a real estate investing business, which I am, but I'm really in the tax management, tax strategy business. That's really what it is, because if you move the pieces around intelligently with a good CPA that understands real estate, you can actually defer taxes indefinitely with commercial real estate, which is really cool. So there's kind of a quick tour of all of the major alternative asset classes. My message to you is the following: is really develop a curiosity around this, right? If you're a high income earner, the biggest problem is you're paying too many taxes. And that's number one. Number two, you want cash flow from it. And yes, number three, you want higher, above than average returns. And you can get all those things with alternative assets. Now, a lot of times with alternative assets, you're actually investing with an operator directly, which is cool because you can have more of a direct relationship, right? If you invest in Tesla, you're not going to call up Elon Musk and say, hey, Elon, how's it going? How's my investment going? What do you see in the market? But when you're investing in alternative investment, for example, you can do that. You can actually call up the operator and talk to them directly. That's certainly the case in our case. So we would love to be your trusted partner for the multifamily space. That's all we do is we operate our own multifamily portfolios, and we're coming across a lot of good opportunity right now. And we'd love to talk to you about partnering with those on those. So check us out. We're at nighthawkequity.com. Nighthawk Equity is our investment firm, and we have about $250 million in multifamily real estate. And we'd love to have that conversation. So go to nighthawkequity.com, check out our blog and our downloads, as well as our YouTube channel. Learn more about this amazing asset class of multifamily investing. Book a call with us. We'd love to have a conversation and share some of those upcoming opportunities. All right, catch you next time.